There's no way out of this mess. Something's got to give. And we just don't know what that looks like. I mean, do all the debts that exist go away because they can't find them on the computer anymore? Do just certain debts go away, like government debt goes away, but your household debt for your mortgage and your car loan stay in place? Your school loan still stays in place? It's a very precarious situation.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin Weekly Specials for January 15th through January 22nd, 2024, while supplies last. This week, all our specials come from the Royal Canadian Mint, one of the most respected mints in the world. First, we feature backdated 1-ounce silver maples at $3.75 over spot with a minimum order of 50. Next, RCM new style 10-ounce silver bars at just $2.75 over spot with a minimum order of 4 bars. We also have backdated quarter-ounce gold maples at $59 over melt when you purchase 2 or more. And finally, backdated 1/10-ounce gold maples are just $32.50 over melt with your purchase of 4 or more coins. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.
Hey everyone, this is Elijah K. Johnson with Liberty and Finance. And back with us today is our good friend David Morgan, the Silver Guru, from the Morgan Report. David, thank you so much for joining us today.
Hello, Elijah. Good to be back.
Well, it's great to have you today as we kick off the new year. And it was great to have you on the panel with Francis Hunt and Bill Holter. That was one of our most viewed panels there, and our viewers very much enjoyed it. I did want to ask you more details about the banking system, because it seems like we're continuing to see concerning developments in the banking system, even though we haven't had a bank fail recently. We did beginning last year in March and April. And we'll pull up some of the charts here from the FDIC. Now, this is in the banking system in general for FDIC-insured banks in the U.S., the unrealized losses on investment securities. And you can see over the last few quarters, it's just gotten the situation has gotten a lot worse. We're at over $600 billion in unrealized losses here. And I did want to just to be fair, to kind of show both sides of the argument. We also do have quarterly net income from the FDIC in the banking system. Very positive, $60-70 billion there. So how do we reconcile these two charts? Because it seems like we have these massive unrealized losses, but if you're going just based on what the bank is reporting of this is how much money we're making, it's quite positive. So your perspective.
Well, on the unrealized losses, the key word, of course, is unrealized. So that means that if these banks had to cash out their long-dated securities, you see that's in the dark blue or black, depending on your screen. And in some cases, it looks like it's almost 50% or close to it of the bank's total holdings. So that's very, very concerning for the whole banking system, because they're all interconnected. And yet the other chart shows that their net income is actually pretty stable, and it doesn't show much real loss. So the way you reconcile it is this. So the reason there's the unrealized losses, we'll just go over the basics here, is because interest rates have been increased. So those 30-year treasuries, those long-dated bonds, even a 10-year note, have decreased in value. So if you had to sell them now, you'd be selling them at a loss, and you can see the losses are substantial. And that has been done. And yet you get a net income, which is like a real head scratcher. The reason it is the way it is that the Federal Reserve said, okay, here's what we'll do. We will let you put up your securities, whatever they are, whatever the maturity is, and we'll loan you the face value. So you don't have to take a loss immediately. You're getting a loan. So if you had a house that was worth $100,000 and had a big market crash, and the house is now worth $70,000, and your banker was really, helpful to you, and he said, what I'll do, Elijah, is I'm going to give you the old value of 2 years ago. I'll give you the $100,000, but it's only for 1 year. And 1 year from now, you've got to pay me back. So that's how you can have all this net income, is that because the banking system has been drained of liquidity as far as ready cash. Cash deposits have all moved into money market funds, which means the banks are even more insolvent, yet their net income looks good. Well, why is that? Because they get to play the spread. So you get to get all this, I'll call it free funny money, and you borrow it at X and you loan it at a point higher, and you're making that spread in your direction. So of course your income looks good temporarily. Now, when the call comes, literally it's called a call loan, and they call and say, Elijah, the year's up, where's $100,000? These banks, will they pay it? Can they pay it? Or whatever. The other thing that most people don't ever talk about in a fractional reserve system is how really convoluted it is on interest rates. You don't really ever delve into this part of the equation very often, or at least I haven't heard it very often. So if I only have to have a 1 to 10 ratio, so if you deposit $100, all I have to put on account is 10 ready cash, and I get the other 90% to loan. Instead of getting 1% on the $100, I've got 1% on the 9, but it's loaned out again and again and again, so that 1% goes to my bank, and then I send it to another bank, and they get 1% on the $80, and then the next bank gets it on. So you're really getting like a 10% yield on a 1%, if that's the going rate, let's say, loan, because you've spread that money out 10 times. Of course, it's decreased slightly all the way down from, you have to hold $10, so you loan 90, so 90, you have to keep 90, have 81, and on and on. You do the arithmetic. But I don't think people think about those multiples, because the system is so leveraged or geared, as the Brits say, that it goes both directions. And that's why those bond unrealized losses are so huge. So did I explain it where you understand it? Because probably some of you say, what did he just say?
No, and I think it might be helpful for our viewers then to understand, because obviously the Federal Reserve is loaning these banks right now. So when that program stops, it seems like we're going to have a huge crisis again in the banking system. Your perspective on that, what is the risk here with these unrealized losses?
Yeah, I think the risk is high. First of all, they could roll them over. I mean, one of my favorite movie clips is from the movie Rollover. It's an oldie but goodie. I'm not fond of all the actors in it, but that's a personal problem. So they could roll it over. They could make exceptions. They change the rules as they go, which they basically do. So what will happen, I don't really know. Will the banks, get enough ready cash from the spread that we just talked about and have the money to pay back? Whatever. Maybe they'll be able to sell part at a loss and still cover their bills. I mean, if you have a high net worth and you're, it's a ratio, really. It's like, well, what is your net worth? I mean, maybe you have $1 million and your asset gets cut in half, so you got $500,000, but you have only 100,000 in bills, and then you're still solvent as hell. You've got a 4 times cover ratio. So, but is that the case for most banks? The answer is no, but there could be a few maybe that have something like that. I kind of doubt it, but I don't know the real answer. I am concerned. I think it is something to be concerned with. But I also know the banking institutions they're not dummies. They can come up with all kinds of gimmicks and ways around things. And, maybe they will say, all right, if you can't pay it back, I'm just telling this off the top of my head, but I've learned to think like a criminal a long time ago, because it is a criminal organization. And think along those lines, usually come out with a fairly good projection. So they could say, well, if you can't pay it back, what you have to do is you have to pay back 10% of it, but you're going to be charged interest on that or whatever. So you play these games of paying interest. I mean, how many people out there in America and other places are playing that game in a way by paying the interest only on their credit card? They're not making any payment toward the principal. They borrowed whatever their limit is, 5,000, 10,000, 25,000, and the interest is 100, 200, 300, whatever it is. And that's the money they send in every month, but they're not really gaining anything, but they're not losing anything. They're just staying, running in place, so to speak. So there's lots of ways the banks can come up with ideas to circumvent a call loan and say, the example I gave you, hi, it's a year, give me the 100 grand, which is really how it should work. I mean, that's basically the agreement, but they change these agreements all the time. So I'll leave it there. I think I did a fair job of explaining it. I mean, basically, these banks have got their own best interest at heart, not yours, and they'll do anything. I mean, the reason there's lots of reasons supposedly for the Federal Reserve, but the main reason is to protect the banks, not to protect us.
And it seems like this sort of action and changing the rules, is it sustainable in your mind, or do you what is the end game in this respect?
Yeah, it wasn't sustainable from the day I met you. I mean, the reason that I've devoted my life to this is because it's mathematically impossible for a fiat debt-based monetary system not to fail. And of course, a lot of people go to the extreme and say, well, that means the dollar's worth zero. I don't think we're ever going to get a zero worth dollar, but its trend is definitely there. The 1913 dollar's worth about 2 cents. But the end game, I don't know. What I do know is what they want, and we talk about this almost every show, and that is they want to implement a new system. And then how do you get to the new system? Well, the first thing is the narrative. What story do you tell everybody so it's not the bank's fault and everybody wants to keep their confidence in the banking system? So you have to come up with a good story, which could be like a cyber attack, for example. And then you tag it with whatever, enemy de jure there is. The Ministry of Truth comes out and says, oh, it's the Russians. Well, wait a minute, we used the Russians too many times. It was the Chinese, or it was a rogue state in, the Middle East, whatever. I mean, who knows what they'll come up with. Could be a false flag, meaning that it is a true cyber attack, but it isn't actually done by anybody that's named and pointed out or made the victim. It could be someone, I hate to say it, but someone within the confines of the banking structure, or let's say the system as it exists, deliberately doing and acting as if they're a bad actor, which gives a great excuse. Geez, we're really sorry. We thought we had our security detail really, really on the up and up, but found out that this really smart hacker was able to do this to us. It'll only be a few days, we'll be up and running. But oh, by the way, you need to 1, 2, 3, get a digital ID, do an iris scan, do a thumbprint, whatever. And that's all conjecture on my part, but I think it's a fairly likely scenario. Will it be exactly that? No, it'll be different than what I outlined, but it could be along those lines. So, so to answer the question again, because it's really important. No, there's no way out of this mess. Something's got to give. And we just don't know what that looks like. I mean, do all the debts that exist go away because they can't find them on a computer anymore? Do just certain debts go away, like government debt goes away, but your household debt for your mortgage and your car loan stay in place? Your school loan still stays in place? It's a very precarious situation. In a debt jubilee, all debts are forgiven. So that means, who owes the national debt? Well, the U.S. citizens owe it. And who do they owe it to? A private banking corporation called the Federal Reserve. And yes, the Fed gives money to the Treasury, and there's all this kind of convoluted stuff that's happened in the last many years. But nonetheless, brass tacks simplified, the U.S. citizens, well, they owe it to themselves. No, you don't owe it to yourself. You owe it to a private corporation. And that corporation is in charge of running your government because they print the money. Well, the Treasury prints it, but the Fed borrows it at cost. So, a $1 bill costs them 5 cents and a $100 bill costs them 5 cents. And then they loan it at face value plus interest. It's pretty neat counterfeiting scheme if you can do it. And of course, it's a monopoly and it's legalized. So it's a mess. And will the new system be any better? And the answer is probably worse, what they're planning, because they're planning to just do away with the printing press, basically go to a cashless society and implement it on a digital basis only, and basically either have it on your phone or your phone or your phone. I mean, it could be on your laptop, and people that don't have a phone, I don't know what they do. I certainly, they give you one, I don't know. But it's going a very scary direction in my view, but it's not there yet. And there are, of course, there's pushback. There's the crypto sphere, which is pushing back somewhat, although Bitcoin's pretty much become institutionalized. In my Crypto Conspiracy Theory of 30 podcasts, I mean, anyone's really interested can learn by, I think it's number 14 in that series, that, basically MasterCard's taken over Bitcoin for a large extent. And of course, now you've got Larry Fink in there with the new Bitcoin ETF. I mean, anything in the monetary realm, these bankers aren't going to want to lose their monopoly. There's no doubt about that. They just have to have a good story to keep us in their system.
Now, speaking of a new system, I guess one excuse that could be used to roll into a new system would be a cyber attack. You've talked about the risk of a cyber attack before for the banking system. What do you see the risk levels to be right now in 2024?
I see the risk in 2024 pretty minimal. I think it's I think it'd be used as kind of a last resort. I'm not sure, because I think they have enough leverage to get an economy that's really grinding to a halt, and then offer kind of a UBI, universal basic income, that's based on a CBDC or the Fed Now program or Wall Street's new banking system that's all digital, and then offer an incentive that all you have to do is sign up and you'll get, this basic income. So there could be enough pain on the populace that a lot of people readily do it because they really don't have an alternative. And so I think that would be the most likely way it be implemented. But again, if there's a lot of pushback, they could, and a cyber attack is a legitimate thing. I mean, I'm not saying it will necessarily be a false flag. I mean, it genuinely could be a cyber attack. I mean, we have enemies. You've got, this really is Alex Jones, like him or not. I mean, the guy did a lot of work in the realm of alternative news, and, he's coined the word InfoWars, and that's what it is. I mean, you're getting real information or false information. And the whole key to this idea of digital ID is that we got to know that you are you, and therefore you can't get hacked. And that's really false. You can be hacked almost under any conditions, but they'll never let that out of the bag. So I think the chances of a real cyber attack is less than 2% for 2024. I think the chances of 2025 go up to double, maybe 5% chance. I think the bankers will have a plan A, B, and C, implement a UBI. If that doesn't work, then we'll maybe do a small banking failure or consolidation and put all the banks into a larger bank. And when you do that, you automatically have to change your account. And when you change your account, you have to go into the new system. And now you're in the new system. So now you've got 30 or 40% of the population into the new system only because the banking system itself has consolidated into just a few entities. And so there's lots of ways they can go about it. The main idea for us is how do we regain our freedom and maintain what we have, the little bit we have remaining, and gain back what we used to have and still have the ability to transact with each other. And of course, if you go into, Revelations, it's basically a choice you have to make at some point where you either are in their system or you're not. And if you're not in their system, then you're going to be on your own with others, of course, a community or communities, and you're going to have to figure out how to survive outside of a monetary system.
No, we have talked about before how really one way to prepare for this new system, right? We can't be completely outside of the system. We do have to transact in daily life, but we can hold precious metals and real assets that are outside of the system to really, not be so dependent on the system when this new system hits. So can you expand on that, kind of ways that people can say no to this new system?
Yeah, I think that's the best approach. I mean, that's what I've taught for years, as you know. And you don't have to go hog wild, old expression. I mean, saving, I think most people that learn what's really going on should save in real money. And if you do it on a longer term basis, you'll come out ahead. In other words, if you dollar cost average over the last 20, 23 years from the beginning of this bull market, gold was at 252, now it's at 2,000. Silver is under 5, and now it's at 23. So they're both up. So gold has outperformed silver at this point in time. So I think that's the approach. And then, things get rearranged. It's hard to say what the authorities will do as far as payment goes. I mean, in the 30s, which was a much simpler time and much more agrarian culture where many people grew food and had animal husbandry, much easier to actually survive because of that. But, they bartered, they traded, whatever. So we have that opportunity again. I really think that it's not a sure thing. I mean, even though I just, made a brief textual look at the book of Revelations, we don't know the timing, and we don't know exactly how it's implemented. And what we don't really get from that is, what does the alternative look like? We know there's people that won't do it. And so what does that look like? You just have to use your imagination. My friend Franklin Sanders, who's written a few books and does a newsletter, and he also is a precious metals dealer. Probably shouldn't say that. Sorry, Andy. But he wrote a book called Highland, and it's a fictional book, but it's really pretty accurate as far as what it would probably look like. And the people outside of the system use silver primarily, not in every transaction. And, that's a possibility. I mean, does it, mean much? Maybe yes, maybe no. I want to say one more thing. I had an update from my paid members, and the guy wrote me about why he thought the silver stock should be much higher in price. And I made a video. I usually answer questions that are really pertinent to the entire membership by video, so everybody has the benefit of the question. And I showed that in that video that some of the proponents that, the stocks don't do as well as the metal itself. On aggregate, that's true. If you bunch them all together and average them, that's a true statement. But it's false if you know what you're doing. So, for example, my favorite gold company was $30 when gold was at 2,000 12 years ago. Now that stock's at 100. So it's up 300-something%, and gold is the same price. So if you put your 10,000 gold in the year 2011 September, it's worth 2,000 now. But if you put it into my top pick for a gold company, it'd be worth 6,000. And then I looked at my favorite silver pick, and it did about it doubled. And that is really remarkable when you think of this silver company that's doubled from the time that silver was at $50, because we're less than half of that now, and yet the price has doubled. So if you bought silver at the top of the market at 50, right now you've lost 50%. But if you bought that stock at the top of the market, right now that $1,000 investments were 2,000. So if you know what you're doing, picking, the miners or the resource sector, you can beat the market. And I just want to make that clear. I mean, I know I'm kind of touting my own word. I mean, it's the truth, and it works. And that's why I think you should have a balance between physical metal and the equity side if you know what you're doing. And those numbers are facts. They're not made up. They're not wishful thinking. The problem is it's almost too simple. And once people learn that from me, say, oh, it can't be that easy. So they're always looking for that mother lode, right? That little stock that's 12 cents, it's going to go to $120, and they're going to buy their own island. And that happens, but not very often. So.
Now, speaking of the precious metal markets, I know when we had you on the panel with Francis Hunt and Bill Holter, you said that 2024 would probably be very positive for gold, and gold was already showing a lot of strength. Now, since the beginning of the year, I believe gold is down slightly, but we're still holding that $2,000 level. So has anything changed in your mind with respect to your outlook for this year for gold and also for silver?
Longer term, no. Short term, maybe. On that same update I just described, I went into the charts, and I'm not a big technical guy. I mean, I'm very good at it, but it's just a tool. It isn't, it isn't perfect. I think we could see gold under 2,000. I think it's more for psychological reasons that the mainstream press can say, "Oh, see, gold's under 2,000." No. I don't see it going down a lot below that level. I just think it's going to be a good year for both metals. There aren't a lot of places to go. Real estate market, commercial side looks horrible. Even the residential side doesn't look that strong. Rents are frozen in some areas, but everybody's got to have a place to live. The equity market's still overvalued. A lot of the big names are getting out. I mean, Jamie Dimon, he's cashing out some stock. Zuckerberg has cashed out a great deal of stock and built his bunker. That might tell you something. So a lot of the big players, the insiders, are ditching the stock market, yet they're still making new highs because they can manipulate the stock market with 7 stocks, basically, and make it look good. So it's time to, get real, buy real, be real. All you can do is what you can do. In other words, there's a lot of stuff out of our control, but there's a lot of stuff that we still can do. And I think one of them is to tidy up your portfolio, keep it as simple as possible. I like to teach my members, really pick out 3 of the top tier stocks. 2 of them I just outlined, 1 or 2 of the mid tiers. And if you want to speculate, here's my best guesses. And I had a really hot hand for a fairly long time. And honestly, I haven't had a very hot hand in the juniors, but no one else has either. I did have Kirkland Lake during the kind of the dull mull period. And that was a 10 bagger, but that was only 1 stock out of the list. So, I can't pat myself on the back too hard for that. But I think that is a place to look. That's the most undervalued sector right now. I mean, silver's the most undervalued commodity or money. But as far as the equity market goes, the mining sector is the most undervalued. Well, what if, David, there's a big pushback and a big recession or whatever, which is another question I got, and the answer is, yeah, they'll probably drop a little bit more. But, when you're on the floor, if you're that far off the floor, you don't have a lot to drop, and that's kind of the analogy of where we're at. Could we go lower? Yeah, but we're not going to go down 90% from here. Can't.
I know a lot of guests we've had on have suggested to hold the stock certificates, the physical stock certificates when you purchase precious metal mining stocks. Your perspective on that, because we keep getting questions from viewers and clients of, what about precious metal mining stocks? What about my brokerage account? Is that also at risk if we go through some sort of reset?
Certainly is. I just interviewed David Rogers-Webb. He said his wife thought it was one of the better interviews. I got some compliments on it. Thank you, everyone. I used to always take them, but that was back in the good old days. I mean, basically, it was a lot simpler system, and you could get the certificate. And some of them were actually beautiful pieces of art. I mean, they're you've probably seen them, but some of them are really cool to look at. I tell everyone that asks me, it's their decision. I quit doing it at least a decade ago for the following reason. Everything has gone electronic. In order to sell or buy, you have to be in an electronic system, which means you do a private placement and you get the stock certificate. So now you've got it, you look at it, it's fine art, but you can't do anything with it until you sign the back and put it in an electronic system. So that's an extra step that you must do if you ever plan to sell it. So I've told everyone up until this point in time that you should not bother with it. Just keep it in an electronic system. Now you can sell with a mouse click. If things go to hell, I put out an alert, sell everything and stand on the sidelines, hold your real metal, check with your Brinks account, check with Miles Franklin, and sell everything that's paper. I don't think I'd ever do that, but I don't know the future. Maybe I will. In that case, you'd want to be able to use that mouse and click off and get rid of it. If you have the cert, you'd have to do what I just said, send it in, get it in the system. Maybe, think what's sent in the mail. Who knows how bad it'll get? I don't know. But the counter argument that David gave me, which I really hadn't thought about very much, really hadn't thought about the level he did. And he said, well, if things got to what he outlines in The Great Taking, then you could, not would, but could be dealing with the company directly. So the brokers go away. So there is no intermediary. So I have Phil Baker, I'll just do a shout out to you. So I've got shares of Hecla and I've got the cert. So now I directly, interface with the company and say, hey, I've got 100 shares of Hecla. My dividend is this, and send it over to this address or whatever. Now that's very, very, very remote possibility, but you can't rule it out. But you can't really do that now. You have to go with an intermediary. It's either electronic, like an E-Trade, Scottrade, Ameritrade, Name Any Trade. All those platforms are pretty similar. Schwab, they're all pretty competitive. They pretty much give you the same features for the same cost. Or the very few real brokers that are out there. This is one I recommend. You can't read his name, known him for years. And he's very good. But I'm going to write about it, Elijah, and I know I'm taking a long time, but it's something I really, I want to do what's right by people. Again, it's their decision. You are more comfortable with the cert, get it. I personally don't. It is very, very, very cumbersome. In fact, it's kind of like the banking system. In some instances, I have been told, so it's hearsay, that the broker said, no, we won't send you the cert. If you want your cert, leave our brokerage account and go to get a different broker. And so they did. They left the brokerage and went to a different broker to get the cert. So I don't have a real good answer. I wish I did. Like, yeah, get the cert. No matter what happens, you're going to be protected. I'm not so sure that even if you have the cert and you're dealing directly with the company, what will the company do? Are they under a fiduciary responsibility? I don't think they are. I mean, you own part of the company, but when you're an equity holder, what do you own? You own the right to profits in that concern. It's the bondholders, it's the debt people that own the office building, the chairs, the computers, the muck boots, the helmets, all that stuff. All the actual assets are held by debt, not by equity. Equity just shares in profit. So if there's no profit, then what good's your stock certificate? So I probably overdid it, but it's something I'm going to write about it. I'm going to ask one of my members who actually tried to get a stock certificate of a pretty well-known junior, a very liquid junior, been around a long time. And I'm going to ask him if he'll do me a favor and write up, the torturous trail he had to go through to try and get the cert. Now that you've got it, how useful is it? I don't know, Elijah. So it isn't an easy answer. It just isn't. I just will leave it there because I don't have a good answer.
Well, I think it's very difficult to prepare for all the possible scenarios in the future, right? And we can just do the best we can. And I think if you have precious metals outside of the system, then that gives you some comfort, right? And some safety to do some more speculation in the system, maybe with your brokerage account in the mining space. And even if you were to lose all of that, you still have the physical metals to fall back on. So I think that's one thing to consider. But did you have any last thoughts for our viewers, David? And where?
You summed it up. I'll just reiterate what you said. Very, and how smart you are. And keep it simple. And that's what I teach. When you become a paid member, there's a document called How to Use the Morgan Report. And I go through and explain what you just said. The first thing we do is we get real physical metal. And I'm not a metals dealer, as you know. And why do you do that? For what you just outlined. Because, and in this interview that I did with David Webb, we talked about the ownership theory of money. In fact, I don't have it on my desk anymore, but Jerome Smith, my predecessor, wrote a treatise on the ownership theory of money. So when you own that, you own your own money. Now, if you own a stock certificate, do you own part of that company? The answer is yes. But it's a lot different trail to blaze than having that in your hand. So And again, I think it's worth having both. I mean, if I would have put that money that I just outlined into the stocks, in fact, I'll just retrace that slightly. So when this guy asked, he looked, I've been at it for 5 years, I'm not doing well, he's kind of calling me out. And I said, well, if you follow the rules and you buy the ones I tell you to buy, if you did that and it was 5 years ago, you're up this much. If you bought this one 5 years ago, you're up this much, which is all factual. I mean, I'm not making this stuff up, but people do what they do. I can only give them guidance, and I'm not a money manager, and I don't want to be a money manager, because once you get into that game, it doesn't matter how well you do. There's always somebody that they know whose, uncle's sister did better than you did, kind of thing. And I think it's also better to teach a person how to fish rather than give them a fish. I really think one of the main problems we have, and I met you when I think you were 16, and just so proud to be friends, but you need to become more self-reliant. I think that's really one of the bigger problems that we have. And I help you with the due diligence. I give you a head start. I follow these companies very closely. I talk to management. I do interviews. I do all the things I can humanly do to help give you guidance, but I can't pull the trigger. And if you want to play in the junior only market, then go ahead. But that's not the way you make big money. I know, I did it. I started at a very young age, and I played the juniors only, and I lost my butt. And I learned that lesson the hard way. And that's why I teach what I teach. I do what I do. And people that follow my guidance, actually, even in this rotten stock market for the resource sector, have not done that bad. I'll look in the camera and tell you, because my members watch my stuff, both public and private. The last 3 years have been pretty bad. We're in a high level consolidation for those two stocks that I outlined, kind of like what gold's doing. It's consolidating at a very high level. But once we break out and go, these two companies and several more will really go as well. And the juniors will have their day in the sun. And when everybody's talking about XYZ junior mining company, I bought it for 4 cents and it's at 12 today, and I'm up 400%. Good for them, but be careful, because that usually happens at the end of the market. And I'll be using that as one of my signals to call the top when we get there.
We'll put in the description of this video a link to your interview with David Webb. It was fantastic that you were able to interview him, and we definitely recommend that interview to our viewers there. We'll also put a link to themorganreport.com if they want to sign up for your work there. Do you want to share with the viewers kind of what they'll, I guess you kind of already did, but if you want to just, any last thoughts with respect to where they can find you?
Yeah, I think that's it. I mean, I do a lot on Twitter. I usually do 2 or 3 a day. It's at SilverGuru22. Don't look up my name or my company or the newsletter name. You're not going to find me. It might, but if you my handle for Twitter is at SilverGuru22. I just chose that randomly. I always focus on the whole resource sector. Always have. It's first in rare earth elements. First to talk about cobalt. First to do white paper on the battery metals. I mean, we're kind of leading edge thinkers, not the best maybe, but the best we can do. And that's why I rebranded the Morgan Report, because everyone had the idea that all I ever did was silver companies, which is far from the truth. But in this situation, the uranium stocks that we have in the Morgan Report are just kicking butt. One of them was down quite a bit, but since it's a speculation, it's money you can afford to lose, I just kept it on the list because I knew the management, I knew what they had. And that thing has really, really done well the last couple of years, and I think it's going to go even higher. So, we've got some uranium in there. I mean, it is what it is. I try to look for opportunities. I am a value investor at heart. I know how difficult the mining industry is. That's why I focus on the sectors that I have that have outperformed almost anything else, where, as Mike Maloney and I think Andy have said, that, if you just have the metal itself, you do better than the miners. And again, on aggregate, that's true. But on specifics versus the Morgan Report, no, it's not true.
Fantastic. Well, we always appreciate your time, David. Thank you so much, and God bless.
God bless you. Thank you.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin Weekly Specials for January 15th through January 22nd, 2024, while supplies last. This week, all our specials come from the Royal Canadian Mint, one of the most respected mints in the world. First, we feature backdated 1-ounce silver maples at $3.75 over spot with a minimum order of 50. Next, RCM new style 10-ounce silver bars at just $2.75 over spot with a minimum order of 4 bars. We also have backdated quarter-ounce gold maples at $59 over melt when you purchase 2 or more. And finally, backdated 1/10-ounce gold maples are just $32.50 over melt with your purchase of 4 or more coins. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.